Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. The Federal Reserve expects to cut interest rate 3 times this year and make additional cuts in 2025. The downward projections of interest rate will help companies expand their margins along with easing their financial costs. Capital-intensive companies such as real estate investment trusts, or REITs for short, would benefit from lower interest rates. Take the case of Agree Realty Corporation, traded on New York Stock Exchange under symbol ADC, a mid-cap REIT that focuses on properties for retail sector. John?
Yeah, thanks, Mo. Yes, Agree Realty Corporation has built more than 40 community shopping centers, largely in the midwestern and southwestern U.S. as of December 31st, 2023. Agree Realty's real estate holdings comprise 2,135 properties spread across 49 states and roughly 44 million square feet of gross leasable space. The growth of online shopping has driven concerns about the future of the U.S. brick and mortar retail sector. 2020 health crisis added to this concern, but many retail REITs have survived. Fortunately, Agree Realty Corporation has established tenants, which lowers the risk of occupancy issues that may arise. Despite the company having more than doubled its annual revenues since 2020, ADC stock has actually been struggling. As of this recording, Agree stock is down by about 9% year to date and 12% over the past year. Its high of $80.51 in February 2020, which was just prior to the 2020 health crisis and shutdown of the economy, is actually much higher than its current share price of $56.50 per share.
How is this REIT doing financially?
Agree Realty is actually a pretty solid REIT. It has consistently reported sound financial results that have allowed it to pay steady dividends. Its revenues have increased by double-digit percentages for 4 straight years to a record high of $537.5 million in 2023. That was 186% higher than its 2019 revenue and well above its 2020, 21, and 22 revenues. Analysts estimate that Agree Realty will continue ramping up its revenues, albeit at a slower rate. This is likely due to a combination of some slowing and normalization of its revenue growth. Now, analysts expect the company's revenue to rise by a pretty big 10.6% to $594.5 million in 2024, followed by a still frothy 9% revenue growth in 2025 to $647.7 million. On the bottom line, or profitability, Agree Realty has been consistently profitable with diluted earnings per share growth in 2 of the last 4 years. Analysts expect the company to grow its adjusted earnings to $1.84 per diluted share this year versus $1.63 per diluted share in 2023. And they expect this to be followed by $1.88 per diluted share in 2025.
What's happening with dividends here?
Agree Realty Corporation has also consistently generated positive free cash flow growth in the last 4 straight years. The company actually achieved record high free cash flow in 2023. The company's high free cash flow, of course, allows for dividends, capital expenditures, and debt reduction. Agree Realty Corporation's balance sheet does need some attention, given its $2.4 billion in total debt and $10.9 million in cash at the end of 2023. On the plus side, the expected lower interest rates should help reduce the company's financing costs. Furthermore, Agree Realty has managed to easily cover its annual interest expenses with higher earnings before interest and taxes, or EBIT. The company's interest coverage ratio of 3.1 in 2023 is actually pretty healthy.
John, thank you so much for your insights. At Income Investors, we view Agree Realty stock's price weakness as an opportunity for investors to consider a share of a sound company with a long track record of paying dividends. Agree Realty stock could also be an ideal for those who are looking for monthly income. Institutional ownership of ADC stock is extremely strong, with 529 institutions holding the majority of Agree Realty's outstanding shares. As of this recording, the top 2 institutional investors, the Vanguard Group with a 14.15% stake and BlackRock Inc. with 12.58% stake. Moreover, as interest rates decline, Agree Realty should be able to strengthen its operation and fundamentals, which should help support its dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.